Taxes can be one of the most overwhelming parts of running a business, but with the right strategies, you can save money and reduce stress. So in this video, I'll share 5 essential tax tips that every entrepreneur needs to know. The first one is that you should be separating your business and your personal finances. I've done a video on this before, so go back and check that one over where it goes into more detail. The reason why this is critical is because when it comes to preparing your taxes, you don't want to confuse what's personal and what's business. Plus, that's going to give you a little element of stress because you're now having to separate them and trying to remember which is which. And that's not really fundamentally what you want to be doing. So at the beginning, you want to make sure that you're separating them. You've got a separate bank account for your business and a separate bank account for your personal finances. It also helps when it comes to accurate tax filing. So knowing that you've got the correct taxes applying to only your business expenses is also going to make it easier for you. And it also reduces the risk when it comes to a negative tax inspection. Yes. So when HMRC decides to inspect your business, then you will already have it separated. And so then there's no confusion as to if you're claiming the wrong things or not, right? Use dedicated business accounts, right? So you've got business accounts out there that you can set up bank accounts and ensure that all your expenses are clearly categorized. The next thing is to know what you can claim as allowable expenses. Now, HMRC here in the UK have a website and it's dedicated to the expenses that they say are allowable, dependent on whether you are a sole trader who files self-assessment or whether you're a limited company. So it's definitely worth your time to go onto that website and see the long list of things that you can claim that is allowable. There's a lot of things out there where Dave down the pub says you can claim this, that and the other. I've had that so many times with people telling me what they can claim, and where I have to then send them the link to HMRC's website to prove what is allowable. And it's different rules depending on your setup. So, for example, there's things that people forget, things like your home office if you're working from home. And again, dependent on how that office is set up, depends how much you can claim. Things like your internet expenses, your phone bills, and professional development. So a lot of the times you don't know what you can keep and what you can claim for, but what you want to do is make sure that you're keeping detailed records and receipts to back up whatever it is that you're claiming for, right? Trust me, it's really important to keep your receipts. I know a lot of people don't want to, but it's important because if you have a tax investigation, you have to be able to prove what that cost was for. Okay, the next one is to plan for paying your taxes. You're not just going to wait until it's time to pay them and then realize you may not have enough money to pay your taxes. So as a business owner, you are required to pay taxes whether you like it or not. And you don't want to have to pay extra in the way of penalties and fines. So you want to plan for this. What you want to do is set aside a percentage of your income for taxes to stay prepared. And again, that percentage will depend on the taxes that you have to pay. For example, you may have to pay income tax, right? And so that starts from 20% after your tax-free allowance, and then it will go up a percentage depending on what you earn. If you're a limited company, you may have to pay PAYE taxes, so national employers taxes, national employers insurance, let's get that right. And as well as that, taxes like your corporation tax. And that will start maybe from 19%, again, depending on your business and how much you're turning over. And then there's VAT as well. You may have to pay VAT also. So whatever taxes you have to pay, it's imperative that you work that out at the beginning. What taxes do I need to pay? And when do I need to pay them? And what is the percentage? And then you want to be setting that aside. So maybe you want to set aside, say, 25, 30% of your income. So every time you make a sale and you get paid for that sale, put away that tax in a separate account. It's not yours. Yes, you've worked for it, but it's not yours. It's the government's. put it away and don't think about it. And if you stick to a percentage on your income, more than likely, depending on your expenses, you'll have more to pay than when you get to the end of your tax period. And you can have it as a bonus salary, right? Or dividend. So make sure you have that fixed percentage. And so then you're planning for it. And then there's also apps and software like QuickBooks or KPIM or tax software, which can help to calculate your tax liabilities before they're even due. And it can also remind you of when they're due as well. So use some of these apps that are available for you, because it's going to make it easy and automate the process for you as well. And as I always say, if in doubt, pay a professional, right? Because they can help you to identify deductions that you might miss and ensure that your filings are error-free. So look for someone who specializes, maybe if you're a startup company, someone who specializes in startups. And the reason for that is they're going to have more patience with you. They're going to want to hold your hand a little bit more than it may be some of the bigger firms that, and I'm not saying the bigger firms won't, but look, do your due diligence. There's some people who just want to file your tax. They won't even do your bookkeeping for you. And there's people who will do your bookkeeping for you, and they'll also hold your hand through that process. So make sure that you're connecting with the right person for your business. But definitely using a professional and using software tools is really going to help you. So let's talk about some software tools that can help to automate the process. There's so many apps on the market, and what these apps can do, they can simplify the whole process and also integrate with your bookkeeping software. So it's a case of you might have some CRM tools that you want to use, and they will link with your bookkeeping. Or if you use an EPOS system, like if you're in retail, for example, that EPOS system will also be able to connect with your software. So you can check these things out, because it's going to save you time, and it's going to make that process that you don't like, right? That you don't like to do, which you know you have to do. Anything that you can do to make it easier is going to be worth it. So check that out as well. And you also want to avoid the last minute rush, right? So set these tools up now, okay? April is the beginning of a new tax year. It's the end of one and the beginning of a new tax year. So you want to be setting this up now. If you haven't done it, it's too late for what's happened in the past. That's fine, but set it up now for the next tax year if you're a sole trader. So you've got all these things in place, and the next year you file your taxes and have to pay your taxes. If you follow my guides, you'll be set, right? So let's recap some of those points. So by organising your finances, by knowing and planning your deductions, right? Planning ahead is only going to help you, and it's going to make your tax season much less stressful. Like I said, it's coming up, it's April, we're in April now. And so you should already have prepared your taxes to file. You don't wait till January. Why wait till January? If you file them now in May, so the end of the tax year is the 5th of April every year. This is for self-employed sole traders. So why not prepare all your bookkeeping, your taxes and everything now if you do it yourself? Because if you file it in May, April, May, you're going to know exactly how much tax liability is that you won't have to pay until January. So here's the thing, if you haven't saved that money, or if it's more than what you thought it was and you don't have enough for it, or you have nothing, you still have May, June, July, August, September, October, November, December, 9 months, 8 to 9 months, okay, to be able to put that money down towards your taxes. So it's always better to do it as early as possible. That's taxes. I know it's one that we don't like to talk about, but once you get yourself a system and a strategy and automation in place, you can make it less stressful for you. So what's one tax tip that you wish that you knew earlier when you started your business? Let me know in the comments below. Okay, so remember what to do. Subscribe, hit the notification bell and share, and I will see you on another video. See you soon.